Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining us this Friday afternoon, we have Mark Marex, Senior Specialist with Index Research and Development on Nasdaq's Investment Intelligence team, to check in on some technical indicators to put the recent volatility that we've seen over the past couple of weeks into context. Mark, it's great to see you as always. Welcome back to Trade Talks.
Thanks for having me back, Jill. Great to be here.
All right, you got it. Let's take a look at the relative strength indicator. I know you pay attention to this.
Yeah, so like to always check in on this whenever we're either setting record highs or coming through a bit of a corrective period, right? We kind of did both recently. We set new records just a couple weeks ago, had that slight correction begin in late November with that Omicron variant news coming out. But we've since bounced off of that. We're holding pretty strongly above 16,000 on this index. And what you can see here with this RSI in the purple dashed line, what I've kind of bolded out there is the 70 level and the 80 level above it. 70 is kind of usually the cutoff for when things start to get pretty bullish in terms of relative strength indicators. And then 80 is very bullish. And you can see that the purple line hasn't crossed that second 80 line in a very, very long time. It was over a year ago, actually, in about second to third quarter 2020 that happened. So we haven't been getting overly heated, even with setting these recent records. You can see we did jump above 70 a couple times, had that quick correction down closer to the 40s, and now bouncing up a little bit above that. But overall, nothing too drastic in terms of overheating on the way up or correcting on the way down in terms of this relative strength indicator.
Right, and of course, time horizon is always important to watch too. So walk us through the short and long-term moving averages.
Yeah, so looking at a couple shorter term averages to start, 20-day and 50-day, 50-day in the red here. And what I've just kind of highlighted for the viewers is, the last couple times that we had these corrective episodes, not even full-blown corrections in the Nasdaq-100, but just kind of brief pauses in this kind of relentless rally upward. We have crossed through both the 20-day and the 50-day over some of those episodes over the last year plus. You can see most recently we bounced sort of right off of the 50-day. We didn't cross below that, even though we did cross below the 20-day for a couple days. So that to me means that we're pretty supportive, at least from a short-term technical perspective. I don't think the next leg down here is going to necessarily be, testing through the 50-day. It's probably got to consolidate closer to that 20-day moving average, which is kind of where we are right now.
All right, and finally, let's wrap up with some of the indicators that you're watching with the options.
Sure. So in terms of equity put call ratios, courtesy of the SIBO, measuring all the equity options activity in the U.S., what you see here is a pretty long trend downward, right? If the trend line, it kind of starts at the left-hand side at around 0.7. That's typically what people consider to be the cutoff between, if you have 0.7 puts for every call outstanding out there, that means things are getting pretty bearish, right? We've been way below that for a pretty long time. We've been touching 0.4 many times this year. We finally seem to have kind of sustained, broken that trend line to the upside a bit and approaching 0.6. So people definitely getting a bit more defensive, which makes sense heading into year end with all the uncertainty around the Fed, around COVID still. That's one we got to keep monitoring to see if people continue to get more bearish outright with their options activity, or if they're just going to be playing a bit of defense into year end and early next year. On the right-hand side, VolQ, the volatility index of the Nasdaq-100, you can see that spike around 30. We got almost up to 30 in the last couple of weeks, but it was pretty brief, pretty short-lived. We've been, regressing back towards that 20 level, which we've been under for most of the past year. A pretty calm overall trend in the volatility, despite that quick spike that we had late November, early this month.
All right, Mark, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.